Good morning, everybody. Hey, welcome to Tuesday, November 26th. As we do have some earnings today. Yesterday was really slack on the earnings side, but today we do have some earnings that come out and some popular names that you're going to recognize as Dave and I start to really discuss those going forward. So, and on the economic front, not a lot today. There's a big slew of them that come out tomorrow sometime that we'll talk about then. But let me remind you, I want to thank you for joining us today. If you like what we're doing, please like this page and share it with your friends and family. And Dave will be with us here in just a moment.
105.7 Highlands Light FM. I'm Dave. We're at 8:39. Time checking on your money and see how we're doing on a shortened week on Wall Street today. How is your retirement fund doing? Well, based on yesterday, not half bad. Let's head downtown and see what's happening today. The offices of Statler Financial Services in downtown Sebring. Phillip Statler on the line. Phillip, good morning. How you doing?
Good morning, Dave. Hey, doing well today. Counting down to Turkey Day and looking forward to spending some time with family. So, but yesterday was just a barn burning day and to the upside for sure.
Boy, it sure was. I mean, the S&P and the NASDAQ, both new records. Dow didn't quite get to a record at the close yesterday, but it's within inches of another record close as well. I mean, can this optimism ever end? And what happens? We get the Fed Chair Paulson yesterday basically telling reporters, number one, we got our finger on the lever if we need to do anything. Everything looks pretty good right now. We think we're optimized on interest rates. And, oh, yeah, by the way, he sees no reason why the growth spurt should end. Pretty much rose-colored glasses, but it was kind of like heroin to the stock market yesterday, wasn't it?
Yeah, sure seemed that way, man. It had a huge bump. And we're really in nosebleed territory, setting some new records on some of the indexes.
Oh, yeah. And like I said, the Dow may not be at a record, but it's within a stone's throw of a record as well. You caught something out of China yesterday as well, which just kind of added to the euphoria, kind of like they did on Friday. They were saying that things are going okay with the trade as well, or the trade talks, right?
Yeah. We're still getting some rumors out of there that things are looking good on the trade side. And I think that also helped, along with Paulson's speech, to increase some optimism. I saw some headline that, hey, the folks out there, the markets don't care about the impeachment. They care about China trade, and it's going to hinge on what happens there.
Well, it all kind of blends into something that you and I have always said. Money doesn't have a political bent. It goes where it thinks it can find more money, date more money, and make more money, right?
Well, that's true. Yeah, that's always looking for more money.
Absolutely. We've got a whole bunch of household words really on reports for the quarter. Some of these companies are smart. They wait till earnings season is pretty well over if they got a decent report, and then they all of a sudden become headline news, where if they buried themselves in with all the banks and the big industrials, we just kind of make mention of them. So some stragglers, but some household names like, for instance, Dick's Sporting Goods.
Yeah, Dick's Sporting Goods came in. They had a really good quarter. They beat by 14 cents a share. Revenue was also above the forecast. Here's where they really shine, though, Dave. They had a same-store sales increase of 6%, and that was more than double what was expected. And then they also raised their full-year guidance. So they probably on your big winners list today. They're up a little over 11.5% this morning.
They're pretty much on the top of my winners list this morning. And I recall it was only about a year and a half ago that we were worrying whether Dick's was going to even survive because they had 2 or 3 really off quarters. They've turned it around nicely, and they've had a couple of barn burner quarters now.
Yeah, they have. They've made some improvements. They're doing well. I think they've made some changes in their inventory selection. So I think that we've seen well, and now it's holiday time. We'll have to see how they do this last quarter of the year.
Understood. While we're talking about retail, which is always nice to talk about on the week that Black Friday falls, Best Buys had another really, really good quarter as well. And what I really like to see is they raised their guidance as well.
Yeah, they did. They beat by about 10 cents a share. Revenue was ahead of forecast. And again, we talked about Dick's beating on same-store sales. Best Buy did the same, not by near that same amount, but they came in and beat by about 0.4% better on same-store sales than was expected. And you're right, they did raise their full-year earnings forecast, which is they kind of, hit all the marks across the board. They're up a little over 4% this morning, about $1, a little less, a little more than $1 off their 52-week high.
And that's just cool. Going into a Christmas shopping season where they're projecting like 4% increases, seeing a couple of big box retailers like Best Buy and Dick's doing well, that kind of gives you a feeling of optimism going into the weekend, doesn't it?
Yeah, it does. It does. And let's face it, Best Buy is one of those stores that really does benefit from Black Friday. They're one of the key people. People will wrap around the building waiting in line to get into Best Buy.
Understood. Now we got to go to the other side of the fence as far as their stock price is concerned. Dollar Tree also reported, and you said that they were a beat, but somebody in the market isn't happy because I'm seeing them big on my loser list this morning.
Well, they did beat on earnings per share by about 5 cents. They came in slightly ahead of what was forecasted for their for their sales and revenue. Their same store sales were basically in line with what was expected. And so they gave a little weaker guidance for the current quarter than what was expected out there. And so they're really tumbling today. They're down almost 12.5% this morning.
A little weaker guidance translated to a 12% loss on the stock price. Somebody was expecting an awful lot more than they delivered, right?
Well, I think so. I think they were hoping that they would at least get the same guidance that they were going to get as before, but it didn't. They kind of downgraded it on that side. Hey, I think we got one more. I got two more actually on the retail side that I think are important. We had Abercrombie and Fitch. The retailer, they missed by a penny a share. Revenue was and same store sales were flat. So that means they were below what was forecasted in terms of sales. So they're down. They're not getting hurt too bad today. They're down 1% this morning.
Okay. I don't have them on either list, which means 1% change doesn't really mean all that much in a world where things are going by 4, 5, and 12% in some cases.
The last retailer I have, and people won't recognize PVH, but they are the Van Heusen, they're Izod. They're the manufacturer and the retail outlet for those type of brands. They beat by 10 cents a share, and revenue was above forecast, and they raised their full year forecast too. So that was good. They're not really getting helped a whole lot this morning. Let's see if I can get the right button here. They're up about 1.5% today.
Okay, yeah, I see them on my winner list, which about the bottom of my big winners. Kind of interesting when one business in a category ends up having a really big or an off day, others get dragged along with it. I was just down a side to Dollar Tree a minute ago. Dollar General is trading down by about 2.5% this morning, mostly on the bad news from Dollar Tree. It all kinds of mixes together, doesn't it?
Yeah, it does. It does. Especially, industries will kind of stick together like that.
Other indications we got for the beginning of the day.
So I have Hormel Foods. They make Spam is what I'm known for most. I didn't realize they make Skippy also, the peanut butter. But they beat by a penny a share. Revenue was slightly below what the forecast had called for, and so they're trading up about 1% this morning.
All right. Looking at the table to set it this morning on the close from yesterday, like we were talking about, nosebleed territory on all three indexes. Dow was up 191 points yesterday, just shy of their all-time record. NASDAQ up by 112, and the Standard & Poor's up by 23.5 yesterday. Both NASDAQ and the S&P new all-time closing highs. We got those stragglers from the earnings season, Phillip, and they all generally look relatively good. How is it helping the indexes 45 minutes before we open?
I would call it relatively flat. I mean, they're all up green, but less than 0.1% across the board. NASDAQ's up 0.05, the S&P 500 is up 0.04, and the Dow's up 0.1%. So nothing major really there to talk about. If we look at kind of the commodities side, we're seeing a little bit of mix The silver's basically flat right now. Gold is down about 0.15, not much there either. And crude oil, though, I'm gonna tell you, you and I need to be getting a little concerned about crude oil here. It's up over 58. It's at $58.38 right now, up about a little over 0.6%.
Well, poop. Yeah, we don't like it over 58. Around 50 is a good number. We haven't seen that for a little while. Overseas markets kind of a mixed bag. Japan was up, but Hong Kong still worried about their domestic issues, off by a bit at the close early this morning. Mixed bag in Europe. Germany's off. Great Britain is up by a little bit this morning, but kind of like our markets, there's not a ton of moving. I think we're looking at a little bit of profit taking, offsetting continued optimism, and they're kind of balancing out to zero this morning, wouldn't you guess?
Right now, that's definitely what it's looking like, Dave. And so we're going to have to wait and see what happens. I mean, this is kind of a slow week too, right? Because we got Thanksgiving, the holidays, the traders will be cutting out early tomorrow. And so that's all going to weigh on how this week ends up.
Yep, and tomorrow tends toward being a day in which there's a lot of wild swings because the volume's down and then everybody heads for the eggnog about noon, even if the market does stay open. So wild swings have been known to happen on the day before Thanksgiving, don't they?
Yeah, it is definitely possible.
Absolutely. Hey, somebody need advice to be able to counteract those wild swings and make sure retirement is the right experience for you and your family. Time to make contact with the pro. How do I find you to get that contact?
Dave, give us a call at 382-0037. Especially if you're looking for somebody to help coach you into and through retirement, that's what we do. Give us a call at 382-0037. Take a look at our website, statlerfinancial.com, and then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
And back one more time before the holiday tomorrow morning here on Light FM. Phillip, thank you so very much. I appreciate it. We'll catch you on the morrow, all right?
All right, man. Thanks.
Thank you. Be well.
Folks, I want to thank you for joining us today. I hope you got something out of what we talked about today. Listen, I'm serious. If you're looking for somebody that cares and wants to help coach you into and through retirement, we're the firm for you. Give us a call. Let us walk you through our process. 863-382-0037. Have a great day. I'll talk to you tomorrow.